Hello everyone, welcome to this week's edition of the Fibonacci Review. Today we're looking at the IT giant Apple, and what we're going to see here is a fabulous example of how the Fibonacci series works in our modern volatile markets, but how it can also be used to give you a forecast of potential support and resistance zones in the future. Now, had we been looking at this chart somewhere down through here, maybe in April last year, trying to figure out what it was doing, what we can do is we can go in and use the Fibonacci retracement tool. We can use it from the major low to the next major top, and then we can run this across and have a look and see what the market's actually doing. Now, on occasions, after the market puts in a peak, you'll get support or resistance around these levels. And sometimes it can give you a very powerful clue. To me, one of the obvious ones is how the market's got support through here, sat at 61.8, now at 38.2. It's sitting here, and for 3 or 4 days, it's sat on it. Now, if that can break through and continue to rally, then it's most likely to retest the major top. And in fact, what it did do is it continued to run higher. Now, what we all want to know is how far the market's going to run. So what we're going to do is just simply rescale this chart. If we now take this tool, and you can see that we can just move this up here, and we can just run this to where this was the previous top, and now we've just moved the scale up. I'll do that again for you. So what we're doing is we're taking this, which was the previous high, and we're just going to move that up until the next level, the 23.6, is sitting at that top. So if we just run that up and keep that moving, you can see now we're sitting at the top. This now tells us that 289 is very likely to be a significant price level, and that was the major high. Now, what this has done is it's come back again to these Fibonacci levels. So it's very simple, very easy. There's no guarantee the market will get there or that it will reverse when it does get there. But it lets you be prepared well in advance to watch for this particular price for any kind of market patterns or clues that suggest a potential reversal or an exhaustion of the current run. I hope that makes sense for you, and of course any questions or queries, you're welcome to send them through. See you again next week with another look at this fabulous Fibonacci technique in trading. Bye for now.